Hello, everyone, and welcome to another episode of Money Macro Talks. Today, we will talk about the great demographic reversal with Charles Goodhart, who is Emeritus Professor at the London School of Economics. Now, Professor Goodhart has written this book together with Mr. Pradhan, The Great Demographic Reversal. And just to start, Professor, can you maybe tell us what is the Great Demographic Reversal?
Until fairly recently, the population everywhere was increasing, and there were many more younger people, and the typical relationship between age and population was rather like a pyramid, because there were more younger people than there were old people. Now that's reversing for two reasons. The less important reason is that the old are living for longer, and I'm an example of that. I'm almost 90 now, and the average life expectancy is increasing, although healthy life expectancy is not increasing by anything like the same amount. And one of the problems that we're going to face is that the old get much sicker, they have dementia and other diseases, and need much more support and care than the young. But a much more important concern, and one that is increasingly worrying, is that the fertility rate, the number of children a woman has, is dropping. And it's dropping in the advanced economies and in Eastern Asia, in countries like China and Korea and Japan, well below the sustainable rate. Every woman needs to have a fertility rate of 2.1 children in order to keep the population constant. The 0.1 is because some children die before they can marry and have children themselves. So you can see that, a husband and wife, a man and woman, need to have two children to keep the population constant. And in the advanced economies, the population has actually been going down. The fertility rate has been going down, and in some cases, really dramatically so. The fertility rate in China is now as low as 1. It's below 1 in South Korea. It's about that level in Japan. And that means that the ratio of workers to the old who are retired, dependent, and often needing care is worsening. There are going to be fewer workers for the old, and that is going to mean that providing pensions and medical support to the old is going to increase dramatically. If you combine that with the other needs that there are for fiscal expenditures, defense expenditures because of the geopolitical problems, the need to deal with climate change, it's all going to lead to serious increases in the need for public sector expenditures at a time when the ratio of public sector debt to GDP, to level of incomes, is worsening really quite dramatically. Add that to the decline in the number of workers and the tax rates required to stabilize the fiscal position are going to increase, have increased, and will increase dramatically to a level which effectively means that the political parties, any political party, any government in power, is going to find it almost impossible either to cut expenditures or to raise taxation to a point that will stabilize the debt ratio. And that's going to mean huge difficulties and very likely rising interest rates and lower growth in future.
And why, for the non-macroeconomists listening, why does this mean that interest rates will probably have to rise?
Because the likelihood is that inflation will become worse. Over the decades, the great decades from the end of the 90s, really to about 2020, not only was there an increase in the number of workers in many advanced economies, but also there was a huge shift of manufacturing to the economy of China and in Eastern Europe, which meant that there was a reduction in goods prices. And it also meant that there was a very considerable increase in the availability, particularly to manufacturers, of labor. And that meant that inflation was low, but at the expense of rising inequality. Now, in future, there's going to be much more of a shortage of labor. And when there's a shortage of something, its price tends to go up. And particularly since there will have to be higher taxes on labor. A combination of a shortage of labor and higher taxes on labor incomes means that they will ask for much higher wages. The great unknown, of course, at the moment is whether artificial intelligence, AI, will lead to much greater productivity and mean that we need less labor in future to offset the decline in the availability of labor in the advanced economies. And
Yeah.
nobody quite knows what the effect of AI will be, but it probably will be to increase productivity and reduce the demand for labor, particularly of those with university degrees, as is already beginning to happen. And so AI will provide something of an offset. How much of an offset, I don't know. Nobody knows. But apart from that factor, the likelihood is that the shortage of labor and the imposition of taxes on it is likely to raise inflation, and if inflation tends to go up, so will nominal interest rates go up and have to go up to try and keep inflation down to some reasonable level.
So, can I summarize sort of the mechanism that you have in mind as, look, we're going to have less laborers, but consumption will likely keep up because elderly people will still buy a lot of stuff, especially healthcare and other services. And so labor will become more scarce. And so that's actually good news, maybe for laborers in the sense that they can ask higher wages.
Yeah, yes, it is. Earlier technical progress almost always replaced muscle power by mechanical ability, or replaced horses by horsepower in tractors, for example, in agriculture. So that what you got was that the less educated, the lower classes, tended to lose out relative to those with human cognitive skills, basically human capital. Now, AI is going to replace human cognitive skills, and that I think is going to mean that the gap between the average income of the middle sort of classes, university-educated graduates, and those who really have nothing to offer except their muscular skills, is going to diminish. So inequality within our countries, which has increased really quite a lot over the last 30 to 40 years, I think will now decline, because the premium that people with a university education could enjoy is now going to decline.
So I think that's a very interesting and optimistic takeaway. But will it be possible that that perceived benefit will actually be offset by the fact that these workers who are now earning more compared to maybe those that were previously above them still need to pay for all the elderly people that are not working anymore?
Indeed, indeed. And that goes back to the sort of the fiscal problem, which I think you probably know there's a famous saying, I can't remember which European politician made it, which is, we know what we ought to do, but we don't know how to get re-elected if we do it. And what that means is, what we ought to do is we ought to cut the level of pensions because we can't afford it. We ought to raise the retirement age. We need to. And we need to increase various kinds of taxes, particularly those forms of taxes that don't cut back on growth, such as taxation on land and property, rather than taxation on income. But to do those is likely to be politically impossible. Most of the extreme parties on both the left and the right offer claims that they can solve the fiscal problem, and they have no real means of doing so, no real way of achieving that.
So, is this something that can already explain partially what we've seen in France, which has relatively good demographics actually compared to many East Asian countries, and yet has found itself in a massive political crisis for the last couple of years because
Absolutely.
they just weren't able to raise the retirement age above, like, what is it, 62 or 64 or something like that, right?
Exactly. It doesn't matter who wins the next election in France, I'm the RN or whoever. They don't have a policy that will deal with it. It will simply be get another crisis going. And it's hard to see quite how we get out of this. And that's why life over the next few years is going to be increasingly difficult. And France is very much at the front of these problems.
So I would love to get your take, actually, tying this to the sustainability of pensions debate, where there is a lot of talk about France has a pay-as-you-go system. This is unsustainable, right? That's
Yeah.
clear to everyone. But okay, I'm from the Netherlands, for example. The Netherlands also has that partially, but more also a so-called funded system where the idea is, look, everyone will save for their own pension via pension funds who invest in, for example, stocks and bonds. Is that, and that's sometimes presented as sort of a painless solution, right? Because these systems are also rated as being much more sustainable than the French one or the German one. What do you think about that? Because to me, it sounds like the underlying demographics are still as unsustainable as ever. So could this be some sort of financial market trick?
The answer is yes, and it won't work. It doesn't matter whether you try and fund it, because the cost of funding it will become increasingly severe. And because of the developments we've had, with very low interest rates, particularly for so many years, we've had a huge increase in the upsurge in the value of assets, equity assets, which have obviously helped to pay for pensions. But the value of equity assets and the value of houses relative to incomes is now pretty much at an all-time high. And a lot of people think that it's actually a bubble and that it can't persist. So that the likelihood of asset prices continuing to rise at the past rates is very small. In fact, if one's pessimistic, one could see asset prices, both houses and equities, going down a bit in future years. And that means that everyone would have to pay in much more for their pension. And it's going to be increasingly difficult to do so. And with the fertility rate being so low, one of the problems here is going to be that there are going to be an awful lot of childless people expecting to get pensions, and there aren't the young to provide the goods and undertake the innovations necessary to provide those pensions. It doesn't matter how you imagine the pensions are going to be financed. When you get a worsening dependency ratio, it's just not going to work. And the dependency ratio is going to worsening really quite severely almost everywhere.
So what's in your view driving, or is there a relationship between demographics and asset prices? And if so, how does that work? Because I don't think many people think about that or are sort of, educated on that.
I don't think it's inevitable, but what we've got is at the moment is a really dangerous dynamic with fertility rates going down, life expectancy going up, but increasing need for health care because the old, as I said, need much more care and support. I think most people would think that a world with a smaller population would actually be better. The Netherlands and the UK are really very overcrowded, and it would be, I think, better to have more space. You would need less fossil fuels and all the rest of it. But the problem is that getting to a somewhat lower population by a reduction in the fertility rate is going to be very difficult indeed.
So, and what are the economic consequences of Mhm.
Lower growth, potentially higher inflation, fiscal difficulties that are severe, and our political system is not well designed to deal with them. The people don't, I think, recognize how extraordinarily beneficial and how really wonderful the sort of years, particularly since the 1980s through to 2020, sort of 40 years of enormous, incredible progress. Although inequality within countries worsened, inequality within the world as a whole decreased a lot. And a lot of Asians, if you go back 30, 40 years, the poverty rates in China and India were enormous. Now the poverty rates in China and in India, which are the two most populous countries in the world, have declined dramatically. And I think, as my recollection, roughly, is that if you go back 40 years, maybe 50 years, the poverty rate in China was over 80%. It's now less than 1%. And we're getting exactly the same in India. So from the world point of view, the last 40 years have been absolutely fantastic, wonderful, the best ever, dramatically good. But it was partly as a result of a number of very beneficial developments. And these beneficial developments, including geopolitical developments and demographic developments, are gone. And we have to face up to the fact. It's easier for me because I'm not going to see your problems. I know I shall be dead within a few years, considering I'm nearly 90. But you're going to have to face them, and your children are going to have to face them. And it's going to be, the next 40 years are not going to be anything like as wonderful as the last 40.
And do you think that the demographics are really the big trend that is really driving that?
They are a major part of it. They're not the only trend. We have other problems. We have climate change. And the world's population is still growing. So it won't be for really over 50 to 60 years that the world's population will start to decline and use less fuel and so on. So climate change is a serious, very serious concern. And then there are concerns about geopolitical, and we could all blow ourselves up. Uh,
Yeah.
let's hope not. So, but even if we got peace, even if the geopolitical concerns declined, and even if climate change is less worrying and we return to trying to resolve it better than we are now doing, even if those two issues are managed, we've still got the problem of the worsening dependency ratio. And it's very difficult to actually assess what it is that determines the desire or the size of family that people desire. What, in a sense, is worrying is that if you go back really quite a long way, back even to the 19th century, those people who could have a chance at choosing their family size usually wanted two children.
Yeah.
Now, if 2 is the desired number of family size, and you assume that for one reason or another, that 20% of the population cannot have children, that means that your fertility rate inevitably ends up at about 1.6. 80% times 2 comes to 1.6. And that's below the sustainability level. So once you've got a situation which everybody can choose their family size, the result would seem to be that the observed, explained sort of fertility rate to which we will all eventually uh, arrive will be something about 1.6. Now, 1.6 is a lot better than we've got in East Asia at the moment. It's about actually where most of our advanced economies are at the moment. But that does mean that the dependency ratio will go on worsening, and the populations will start after about another 40 or 50 years to go on down. And one doesn't quite see the end of it.
So happiness and freedom will kill us all. Essentially, right? Yeah. Yeah,
Well,
no, I read it as well. I read it in The Economist. There was lots of research that 2 or 3 was the desired family size, and then of course there are many people that don't want kids, and then it
yeah.
makes sense. And on average, you have 2. Yeah, yeah, it's very strange. But uh, how do you look back at? Because you didn't write the book that long ago. You said, look, people were not that interested in demographics, but that's very strange, right? Because this was just, I think, before COVID that you wrote the book, right? But then it was already very clear that this was going to happen, right? So why? And also, demographics has never featured that strongly in economics, right? I know people do talk about it for sure, especially with having too many kids. But when I did macroeconomics, demographics was never a major factor, at least not for advanced economies, macroeconomics. Why do you think that
I
is?
think there's a reason for this, and that is that most people are concerned about what is going to happen over the next year or two. So if you're interested, for example, if you've got money and you're interested in what's likely to happen to asset prices, what you're concerned about is what's going to happen to asset prices in the immediate future. Because even if you think that price of an asset, I don't know, I would choose any, is going to go down in the next month, you don't buy it, even if you think that its long-term value is going to increase a lot. You don't, because you think it's going to go down, so you buy it when it's lower. So all market analysis, or virtually all market analysis, is very short-term. And if you look at the forecasts, basically the forecasting that we're all doing is over what's likely to happen over the next year or two. Very rare to get much in the way of forecasting over longer periods. Now, the problem is that demographics, although it is actually easier to forecast because we know how long people live and we know, know the workforce of 20 years ahead is already born. So we know that. But it's very long term. So what's going to happen to things like fertility rates and life expectancy and so on plays virtually zero role in the vast majority of the forecasts and the market analysis that we've got, because it's all short-term, and demography is a long-term consideration.
Yeah.
That's not entirely. And we had this huge surge in immigration after COVID, and that was short-term, and that has generated a massive political and considerable economic consequences. And immigration can be short-term. People flee from countries where things are going horribly wrong. And there's a problem about, will the recipient countries want to have them and so on. But apart from immigration or migration, the influence on the normal sort of day-to-day concerns of of everybody interested in markets and where things are going. Demographics don't enter because it's a long-term issue.
Yeah, and that I want to ask you something about first asset markets and then immigration. So if we go back to asset market prices, we've always learned in finance that asset markets are forward-looking, right? And I also know that we cannot predict what asset markets will do, and I'm not going to ask you to do that from an investment sense, but just purely speaking, from one economist to another. To me, it looks like the demographic picture right now means that asset prices will have, let's put it like this, there's a very big chance that asset prices will have to come down for a very long time because they are a reflection of the value of the real economy, right? And the real economy, given these demographic trends, will shrink. And then you also mentioned in the book that what has potentially driven asset markets higher for a long time is the change in power from labor to capital, right? And that you're sort of forecasting in the book that trend will also reverse. And then, of course, just GDP itself will slow down. So, and this is something that, this is a final remark, people never think about. People don't think that asset markets can go down for a long time, right? Like that it can go down for a little bit, but they will always go up. And could that also be because demographics were just favorable alongside technology for forever? So what if this reverses? Then of course asset prices can also go down for a long time, right?
Absolutely, yes, indeed, you're right. But remember, even if you think that asset prices may go down and go down quite a lot, you don't want to sell now if you think that next week, next month, next quarter, they're going to go up further. So that's one of the problems, which is that you can go on having a belief that asset prices are always going to go up, and a sort of momentum buying that you're going to buy because things are going up. And then when things change, you can get the downside being much quicker, much faster, and much worse. But the problem is that, you start short selling now and you can get wiped out before the markets turn. And you may be correct 5 years ahead, but if you are incorrect over the next 2 years, short selling would be a disaster. So, and again, the problem is that the analysis of the markets is inevitably short term. And if it's inevitably short term, the concerns that you rightly express, you know, people are very hesitant to actually sort of take a position on those grounds, because it doesn't matter what markets will be like in 10 years' time, if in a year's time they're still doing something quite different.
Yeah, but for me, look, I don't bet on financial markets, but what I did have to do recently was choose for my pension plan if I wanted to have defined benefits or defined contributions. And I did choose defined contributions, which I think means that you'll get sort of a promised return. Although I could imagine that if the pension system completely collapses, this also collapses. Yeah, it's interesting. This is something that we've seen in Japan is, I think, the only example ever, right? That the stock market collapsed and really took a very, very long time to at least to come back. And
Okay,
Japan is
1929 is another absolute standard case of a market collapsing.
in the US, you mean?
29, New York Stock Exchange crash.
Yeah, but did it then? Oh, and you mean that it didn't bounce back for decades?
Indeed, it
1929. Okay,
didn't
yeah.
bounce back until World War II. Really changed dramatically changed the unemployment conditions in the United States. So I'm from 1929 through to 1939, 1940. It was, It was very poor. I think 1929 is a more severe example. The Japanese example, I think, was, well, both the Japanese and the American example were made worse by bad policies.
Yeah. No, yeah. No. I mean, the dynamics will be very different for sure. But I just find it interesting because people always think about only the stock market being able to go up. And do you think the demographic effect that we've seen, where we saw a big generation, the boomer generation, sort of move through the system, and then also where you saw the formation of pension systems, where you essentially had sort of forced saving of the big cohort move through the system? Do you think you talk about inflation, right? You talk in the book, you talk about, look, that's less consuming. So disinflation or lower inflation was to be expected in the years of the Great Moderation, the 1990s, 2000s. And you say, look, when this cohort retires, then the logical conclusion is that there will be more inflation because they start consuming rather than saving. Is the flip side of that that asset price appreciation was sort of baked into the system during the Great Moderation, and it will be baked into the system after 5 years or whenever the big cohort retires?
Yeah, up to an extent. I think the really interesting issue is what's going to happen in China. Because in China, there is no state provision of pensions. So the savings rate in China, personal sector savings rate, has been enormous. I mean, something like about 3 times the savings rate in advanced economies in the West. Now, when the ratio of old to young increases, as it is increasing dramatically in China, what's going to happen there? Because will the savings ratio go down a lot? And if the savings ratio goes down a lot in China, then likely to have sort of higher interest rates. There'll be less investment, I think, and the growth worldwide will slow down.
But couldn't that also rebalance the Chinese economy in a way that would be good for the world?
It could do, yes. And again, I know at the moment the Chinese economy is being balanced by this incredible surge in their exports, despite the American tariffs. And we don't think that that is likely to continue. I know maybe in the short run, but in the longer run, it's not a way, I think, of balancing the Chinese economy that is sustainable or will last.
Yeah, so I'd love to talk to you about that a little bit later, but first, circling back to demographics, I wanted to get your view on migration. So what we're seeing with demographics is just very big, right? There's just, I think people underestimate how many people are going to retire. But still, some people talk about migration being potentially either a solution or at least something to slow down the bleeding. What is, of course, there are political costs to that, but if we leave those aside, do you think that migration, potentially, for example, from Africa, where there are a lot of young people, like that regions that will open up to that, like potentially some countries in Europe or the US after Trump, who knows? Can that be a solution to them, or is it just too small?
I don't know. It's a question of sort of the political acceptability. Um, I'm, it's inevitably more difficult, I think, to have migration solve your demographic problems when the migrants are obviously different from the sort of indigenous people. Um, and whether a large-scale African migration is feasible or politically acceptable or desirable is a very large issue and a difficult issue and an important issue, because policy with respect to Africa is going to become increasingly important over coming decades, because the share of the world's population that are born in Africa is going to increase quite dramatically. And there are some really quite sort of astounding figures that I think within about 30 years, the population of Nigeria will be larger than the population of the United States.
Oh,
And
yeah.
don't take that for gospel. Check it out, because my memory isn't as great as it was. But the relationship between the populations in Africa and the populations elsewhere is changing, and changing very fast, and changing really quite dramatically. And the implications of that, I think, are very important and need to be considered.
And maybe I can tie that to a question about demographics and growth. So I've seen two stories about the rise of China. One is very much an institutionalist kind of explanation. I actually have seen three. One is sort of about investment-led growth, and maybe that's tied to the institutional explanation where the institutions made that possible. And then the second story is one of a demographic dividend, because the period of growth for China was also coinciding with a massive demographic dividend where there were fewer children to take care of and not that many elderly to take care of. So just workers all along. And now India is going into that phase of having a demographic dividend. And then Africa will go into that phase around 2050 or something. So do you think that we can see a sort of second China growth engine, first in India and then in Africa? That's my question.
Getting away from demographics for a moment, I've always thought that growth really was a function of good governance and good education. And one needs to remember that the Asian countries historically were sort of world leaders. And China was the most advanced, prosperous country in the world for millennia, really almost until the Industrial Revolution. And whatever else one can say about, their government, under Deng Xiaoping and subsequently, it's, at any rate economically, been well governed. Again, the Indian population historically has had a large skill level, and currently under Modi seems to be economically well governed. And I think the question about Africa is one of governance, and also you need to have scale. And one of the problems in Africa is the differences in languages between the different regions means that the ability to scale up in Africa is much less than the ability to scale up in China and India actually was. And you look at African governance and you compare it to the governance of China and the governance of India, and the comparison is not very favorable.
Yeah, no, I totally agree. I just wanted to see what you thought about it, but I'm actually on the same page. So maybe a final question, going maybe away from demographics, but feel free to tie that back into it. You mentioned as one of the big trends governing the global economy right now. You've mentioned climate change, but you've mentioned demographics, but you've also mentioned geopolitics. Now, I think you are very different to many of the viewers on this channel and also myself in the sense that you have lived through many geopolitical changes in your life, right? And in your career. How do you view the current moment? One of the big discussions is now with a speech of Mark Carney that went viral. I don't know if you've seen it. Like, we're going back to the era of great power politics. And the liberal order is dying. That's sort of the consensus now. What do you think about that story?
I don't know. It is possible that the political conditions in the United States may reverse. I don't think they'll ever be quite the same, but it's not clear that the America that overall multi-country subject to the rule of law system might not return. It's possible. And again, going back to demographics, the idea that China is going to be a sort of huge major power, economically, politically, and everything else, over the longer term, is, I think, overstated, because their fertility rate is so low that within 2 or 3 decades, they will really start running into severe troubles. And if you let me take a comparison. If you go back to the 1970s and 1980s, people seriously thought that Japan was going to be a sort of a major competitor in economics and power to the USA. If you look at Japan now, and it's an advanced economy, people there are well off, but the idea that it's a sort of a major power has sort of disappeared. I think China will go the way of Japan in the foreseeable future, and Russia. Even before the deaths that Putin has brought about to his male population, the idea that Russia is going to be a great power over the foreseeable future, it just doesn't add up. I mean, the demographics of Russia are just too awful. So if you assume that Russia and China, that their sort of role as great powers is extremely temporary, I think the idea that we're going to live in a world of major great powers that are autocracies that are like the present, I think it's very, very short-sighted. I think what really worries me is not so much the great power rivalry, but the inability of countries within the European Union to forge agreements on things like capital markets, fiscal policy, and so on. What worries me is not so much the great power, but it's the fact that nationalism remains so ingrained. I come from a country which was stupid enough to leave its membership of the EU for crazy nationalistic reasons, led by a man who's now in charge of a party of the extreme right, which is sort of leading in the polls. The ability of ordinary people in your country, my country, every country, to put the concerns of their own local nation above the overall prospects for larger areas and the world as a whole is very worrying. I would worry much more about nationalism in your country, my country, every country, than I would worry about great power rivalry.
And if we bring the lens of demographics to nationalism, 2 stories come to mind for me, which are going in a different direction. I'd love to get your take on it. On the one hand, you're saying, look, demographics will cancel out some of the inequality we've seen before. And I think we have a lot of evidence that increased inequality leads to more populism. On the other hand, I've now seen also a couple of economists saying, look, what's also feeding into populism is economic stagnation. Then you get zero-sum politics. But the demographics are feeding into economic stagnation and zero-sum politics, potentially even between generations. So which of these trends do you think will win out?
I wish I knew. I wish I knew. I think you're absolutely right. And one of the things that sort of worries me is if the middle university-trained graduate middle classes find that their condition becomes a lot worse with AI, what will their political response be? I don't know, but it could be. One can argue that one of the reasons for the rise of Hitler was that the middle classes had had their assets and wealth wiped out by hyperinflation and were prepared to go extremist. If the middle classes find that their uh, particular advantages and position in society get threatened, uh, how will they react?
Yeah, and
I
this actually ties into, I was at the Holocaust Memorial Museum a couple of years back, and it just noticed like they went over the Nazis, the prominent Nazis. It was doctor this, doctor that, doctor this, and I was like, oh my goodness, these a lot of these guys have PhDs, and how could they do this, right?
Yep. Yeah, absolutely. The problem is that the reduction of inequality may comprise both a rise in the relative economic standing of those people who work with their hands, if you like, and a fall of those people who work with their brains. And it's not clear what the political implications of that will be.
Very uncertain times. Professor Goodhart, I want to bring this discussion to a close, but if you have a final thing to add about the great demographic reversal, there's absolutely time for that.
Well, we'll just say that my co-author and I are shortly going to be producing a new book called The Unanchored Central Banker, which is going to take a number of these issues further forward.
I would love to have you back on when it's out. All right, Professor Goodhart, thank you so much. For me, actually, one of the key takeaways was that I'm not crazy, in the sense that for me, demographics seems like such a massively important thing. And when I look around me, it just doesn't seem to be the case that people are paying enough attention to it. And this is why I really liked your book so much. And you, of course, are a very prominent voice in economics. And so I'm very happy that you wrote about it, and that you also gave this explanation that, look, people are, especially in finance, just looking ahead a couple of years. And so maybe for the next couple of years, this doesn't actually matter that much. And also what you mentioned was that when we look at great powers, the rise of China and Russia, which is such sort of a hot topic today, and it was actually such a hot topic for me, especially when it comes to Chinese technology, which has just impressed me so much in the last 2 years, that I did notice with myself that I forgot that the demographic story, I was covering it 2, 3 years ago a lot, and I was definitely thinking about but I found it to be overridden a little bit by the current moment of Chinese incredible innovations. Demographics, yeah, is still destiny, I guess. So thank you so much for putting that all into this very long-term macro perspective.
Thank you.